Good morning, everybody. Chris 70 here. My morning drive. Actually, a nice commute today with the federal government closed today to honor the late George Bush. But not here to talk politics, talk a little bit about notes. And one of the things I want to mention is, I'm not a big fan of watching the news, but when certain events happen, it's pretty evident. And one thing that I'm sure we're all aware of is the stock market, which had another big loss yesterday. I think it was over 800 points, or it was down 800 at one time. But what's that mean for note investors? Well, I was just talking to people at work and family and stuff, and everyone's already starting to panic about having their money in the stocks, in the stock market. So what does that mean for us as note investors? Well, now it's like, the water's being chummed and we're sharks, in the sense of now is a time where you should really ramp up your marketing to people with self-directed IRAs or other investors and let them know what note investing is, that it is an alternative. It's really got no correlation to the stock market, and and how note investing could possibly benefit them, even with small dollar amounts. If you have performing notes that you could sell on a partial, it's, don't want to call it a safe haven by any means, because it is an investment, but it is another avenue or another area where if you explain to people what it is they're investing in, you could definitely try and lure some of those investors from the stock market, because right now people are panicking. And I believe over the next month or two, as certain things happen in my location, the Washington, D.C. area, with what we have on both sides of the political spectrum, I don't envision it to get any better, honestly. And I think the stock market is still going to start to slide. I think we're going to start seeing some softening in the economy. I don't know if you've checked bond rates, but there's some articles about how the 3-year bond is providing better returns than the 5-year bond, which is another, I'll say, warning sign for things to come. So right now, I think while the time is right, now would be a very good time to start reaching back out, or not start reaching back out, but continue to reach out and ramp up your efforts in marketing to individuals, because other markets that people are more aware of and primarily investing in are a lot more volatile. So hope you enjoyed this video. And what I'll start doing next week is start doing some quick topics on certain things about reaching out to individuals and how I've done my marketing. As many of you know, I've been a student of Scott Carson's and pretty much follow what he says, and it works. So I'll share kind of some of my stories and things that I've learned as I've reached out to other investors. So thank you, have a good day, and if you have any questions, feel free to hit me up, send me an email, find me on Facebook, Twitter, Instagram, or any social media sites. Thank you, and I hope you enjoyed.